This is going to be a learning session for a lot of reasons. Good morning, friends. This is the 0DTE Morning Market Analysis, and I'm Coach Ernie, and I'm here to tell you or to report to you what we believe is the best situation that you can follow to do your daily 0DTE trades. And typically what I do is I do some sort of market focus based on what I discover in my research in terms of macro conditions and how that might affect our 0DTE trades. And so this morning I was doing that research and came across some what I thought were some inconsistencies with this sort of heightened awareness of energy. And that there were some reports out there by Reuters that OPEC, through some what do they call it? They call them unsubstantiated, or they have no sources, unknown sources report that OPEC is going to cut production. And then you read a little further into it and you realize that they have no real sources at all. In fact, and they're not referring to actual cuts. They're referring to compensatory cuts that they had already planned on that have nothing to do with supply or demand. And then you go a little further and you look at things like Bloomberg and others, and they're actually talking about, because of tariffs, they're considering production increases. Now, this substantially affects the market. And, you look at oil and it's up because, they read Reuters. They think that, hey, they're a valid news source. But I'm here to report that can't be, that's about the furthest thing from the truth. They do not say that their sources are unnamed, or that they're speculating, or that the reason for their reporting for a bullish move in oil is really due to something that has absolutely nothing to do with what OPEC is reporting. This is not new stuff, but it just goes to show that when you're doing this type of research, that you have to hold a level of skepticism. So, if I were reporting that oil was like the play today, and then all of a sudden there's new information that comes out that just totally blows away Reuters' bullish report, and oil goes down, then I'm going to be left holding the bag, right? So that is apparently what is happening today. The other thing that I learned is that AI is an incredibly powerful tool for doing analysis and so forth. It's not so good when it comes to real-time analysis unless you provide it with your own real-time data for it to make its assessment. Because you can say, hey, use real-time data, or do this or do that. And the AI will, if it, in the absence of it, in its directive to, I guess, please you with an answer, it won't come back and say, well, I don't have really real-time data, but I found this, and maybe we can use that, and this is what I see according to that. It won't do anything like that. It will hallucinate, and it will make up shit. So that's a stark reality with most of these LLMs, that if you frame a question, for instance, on how you want an analysis on X subject, right, and you put a positive spin on the way you describe how you want that analysis to be presented, that's exactly what it's going to do. It's going to put a positive spin on it and maybe give you a biased report. So you have to be really, really careful when you're using the AI. And the reason why I'm bringing all of this up is that these are things that you wouldn't find out unless you're using it to a higher level, and you start understanding exactly what these AIs are supplying. And like I said, they're incredibly powerful tools. But I guess the old saying goes, garbage in, garbage out. And if there is no garbage, then they'll just make it up. And you're almost guaranteed to get garbage out. So that's an important lesson. I learned that this morning. So, well, I didn't learn it this morning. I came across the problem. I knew it before. It's just that I was relying, for example, when you're looking at something like Grok. Grok is looking at essentially near real-time data by looking at Twitter, but it doesn't always. It will also use data that it finds with the first thing it finds instead of try to validate. So the important lesson here is that when you're using AI to do any kind of research for you, you also have to put into it directives and prompts that give it specific instructions on how to validate the data, so that you're always starting from a known something, so that you can be assured that what you're getting actually makes sense. I'm sure that a lot of you are listening to me and you're wondering, what the hell is Ernie talking about? Why is just get onto the zero DTE analysis, right? But the reason why I'm doing this is that I'm going into AI in a very big way. I have been for several years, and I'm going to be presenting it as a primary tool and lessons on how to actually use it most effectively. So I just thought I'd throw that out there. And as I said, there's a new service that we'll be introducing next week called FatTail AI, and it will rely heavily on AI analysis and also the way we're using it. We're not really going to use it. Well, we are going to be using it for both real time, but also for some things that aren't really reliant on real-time data. So that is going to be extremely powerful. But when it comes to that real-time data, man, you got to have it locked down. So that's what I want to point that out. And I look at the morning report, the morning macro report, and oil pops up, and I'm looking at it, and I say, I don't know about that. Reuters, I don't. I trust Reuters about as far as I can throw a piano. Quite frankly, because they have proved to be incredibly biased and relying on unreliable data, or unreliable sources, I should say. And you don't see that until you start digging into it, or if you didn't know how the industry worked and who was doing what and what it means when they report certain ways. You'd never know. You'd just take it as for sacrosanct. You just say, must be true, right? Like the news, hey, or it's on the internet, it must be true. All right, enough of that. Hopefully this is worthwhile to you and in your own personal exploits, and knowing that when you're following me and my services, that we take all this into account, and so you're going to be getting the best possible information. All right, and so what we're going to do now is we are going to go to the charts. Let me just set things up. Interesting day yesterday. We have to go to the charts, right? Hold on. Does that bring us there? Yes, it does. Wow, first time. All right, so what we do is we look at three primary factors every morning. We're looking to see where the VIX is so that we can determine our out-of-the-money butterflies, how much we're going to expose ourselves to that risk. When volatility is up, we tend to expand that exposure. When volatility is down, we tend to contract it. And then that volatility level will also point to our playbook on what trades that are most efficacious for that day. Now, we've dropped down into the Goldilocks zone, as you can see here, rather dramatically since yesterday, because for the longest time we were well above and into chaos. And now, this morning, we're at 28.16, which is still fantastic for us as zero DTE traders. Anything in the Goldilocks zone is just right, right? So we're looking at out-of-the-money butterflies that are 35 to 45 wide. I have not done a big-ass fly introspection yet today, so I don't have any reporting on that, but I do know that it is under 20. So we're definitely looking at the wider side of wide. Batmans are starting to fall out of favor a little bit, but still about 60% of the time you might consider a Batman. Otherwise, we're choosing the out of the money fly. Now, which way are we going? Well, that's where we're going to look at next. We look at market direction. And it looks like the move off the bottom and then this little pullback, that's all it really was. Now, what we're really going to be looking for is a break over this level right here on the ES, which is around 55.20. So if we move above that, we may find some resistance there. And we'll see that on the volume profile analysis. But in any event, the directional bias is not bearish. It is bullish for sure. So we've been going back and forth the past few days because we're in that kind of mode. We're bullish today. Just make that correction. The death cross. I love the death cross. It's such bull. But in any event, I just like to put it up there just to remind me of the fallacy of technical analysis and how these things are supposed to be prognosticators of doom. Now, the death cross. If you try to put any statistical rigor to this, you'll find that the death cross is not a good bet. All right. So we're bullish, and let's take a look at where we are in terms of the market. We need to put in our, there we go. There's the morning, and what I'm doing is I'm marking off the morning session. Wow, everything's really choppy this morning. Ugh, I can't get. There we go. I think I got it there. So we're back. We're back into this node here. We're not being threatened by dropping down into this vacuous area of low liquidity, and we're looking to challenge. Now that level that I was talking about, let's see, we'll go back to there. I'd say right about there, be 55.30, 55.25, somewhere around there. All right, and then let's go back to here. And what am I looking at? Let's see. Am I getting the same numbers? Is one of these delayed? See, this is a data problem. Oh, I see. I see. So we're currently at 54.33. Is that true? Yes, we are. All right. And what are these numbers? These all seem like they're all off. How is this? How am I at 5,300 here? Oh, duh, Ernie. Oh, it's the chart. All right. And this is PM. Man, see? I'm talking about AI being fallible. AI has nothing over me. I am the epitome of being fallible. So we need to bring this way over here. And for some reason, my whole system is acting really choppy this morning. It's like I've got this kick-ass system. I've got one of these Mac Ultras that has like 192 gigabytes of RAM. You would think that it would be a little bit more on top of things, but man, this morning it is just, I can't get the line right where I want it. All right. So there we go. So this changes everything. Just like a bad Reuters report would change everything, right? So we're above this node. We found real strong support on it overnight, and as of 3 a.m., which is what is the European Open, wherever it is. Come on, stop. Right there. So you can see that everything's been rallying since the European Open. That's interesting. So if we're bullish today, then we're looking for pullbacks into these structural levels. Man, everything is like slow. See, I think I have to do a system restart, but I'm not going to do it right now. We'll just make do for what we have. So what I'll do is just pull this down a little bit. And you can see here we have another node right on top here that we're trying to break through. We'll see that on the volume profile in a second, but what we'll be looking for are things like pullbacks to these levels and then take a bullish move up. All right, let's go. So here we are. See, we broke out of this big node. We're in this area of liquidity. Now we're trying to enter this node up above. So maybe what I can do is define that. Where is that? Wow, nothing's working. Isn't that interesting? I guess I should always... there we go. Guess I should test the tools before I come online, huh? So this is all good news. We've broken out of this node overnight. We're into this area of low liquidity. It looks like about 5,500, 5,510 is our next line in the sand. And if we can break up to there, I think that we'll be breaking out of. See, that is the line in the sand, 5510, right there. If we can break out into there, I think the market has tremendous upside potential for the remainder of the week. Now that's the key. We've already seen incredible resistance here, and I talked about that earlier this week and last week. Where we've been rejected time in, time out. But yesterday's move, and I think Tesla had a positive spin on what they were on their earnings, and it looks like we may go up. And if the oil situation, see now, oil's down. Yet Reuters says that we should be looking at it bullish. Yet this morning, it doesn't look tremendously bullish. Well, I mean, it's moved off the bottom here for the past few days, but I don't see any big move. I'm going to say bearish on oil. That's what I think. I think bearish on oil for sure. All right. That's our market report. We're 45 wide. We're bullish. And we're looking for moves off the top of this node to go higher, or off the top of this this crevice right here. Or there's no real sharp area here where I can pin that I would like to say that. I guess you could say right about at 5,400, yeah, that's about it. It's not well defined in here. So because of that, and you look at all the moves that have come through here, there has been no landing or stepping stone, so to speak. So I think that we're going to move up and test this 5510 strongly. And if we can continue this bullish move, we're going to continue up. Now, of course, some people are going to look at this and say, yeah, but what about the gap, Ernie? Yeah, screw the gap. We'll worry about filling that later. Maybe never. That's a fallacy, by the way, that all gaps must be filled. Yes, eventually they appear to be filled, but there are gaps that never get filled, and I believe that this might be one of them. We'll see. All right, back to the big head. I know that this. See, I just pushed that twice. All right, I think this system needs a reset. All right, anyways, that's my report for today. Let's recap. Don't believe anything Reuters says. I don't know if I'm going to get in trouble for that one. I don't believe oil is going up. I think it's going down because it looks like OPEC is going to be increasing production because of the tariff situation, which is a good thing for our economy and energy prices and all that. And it looks like VIX has come down quite a bit. So we're still wide, but we're bullish. And that's the story from today. All right. Thank you all very much. Hope you have a good trading day. Coach Ernie, out.